Hello, hello, hello. Welcome back to our series dedicated to empowering business owners with strategic insights. Today, we're going to be tackling a complex but important topic: holding companies and parent companies, when to choose them and when to choose them. This session will explore the benefits and considerations of establishing either structure in your business strategy. But before we get into this juicy topic, let me introduce myself. So, my name is Shane Harris, and around here on these social media platforms, I'm also referred to as Shane the Negotiator. And I help coaches, consultants, and service providers who are overwhelmed and lack guidance to achieve true financial freedom. And I do that by providing expert tax in coaching services, as business coaching. So come on in closer, turn your volumes up, grab a piece of paper and a pen so you can take some notes, so you can learn all about the holding companies versus the parent companies, as I often hear so much about. You guys have so many questions about it. Thank you for those DMs and those emails on giving topics that you want me to talk about. And here we are coming in with the juicy scoop. All right. So let's talk about understanding holding in parent companies. Like, what do they even mean? Like, what the heck are you talking about, Shane? So a holding company is an entity that is created to own shares in other companies, which are known as subsidies. It controls the subsidiaries' policies and oversees management decision, but doesn't partake in the day-to-day operations. A parent company, on the other hand, owns enough voting stock in another company to control management and operations, influencing the subsidiaries' policies and strategic direction. So you're like, wait, what? What did you say? All right, I'm about to break it down for you in a little bit layman's terms to make it a little bit more easier to understand, because it may sound a little bit confusing the way I explained it. All right, so picture this. Imagine you have a big box that holds lots of small boxes. You know those toys, not the toys, but those Chinese, or sometimes the Russian have one. Was it Mutriyashka dolls? Or I forget what the Russians call it, something different. It's called babushka. Those are the two. Like, we have the doll inside the doll and so forth. Well, it's something similar to that. All right. So this big box is like a holding company. It doesn't make or sell anything itself. Inside, it owns pieces of other companies that do all the work, like making toys or running stores. These smaller boxes or companies can do different things, but are all owned by that big box. That's the outside of the babushka or the mariachi dolls. That's the outer side. All right. All right. So now think of the parent company as the mama and the daddy, who has the big child or several children. The parent company is in charge and might make or sell its own things, but it also looks after the children or the other companies by owning them. These children companies can be a lot like the parent, doing similar things, or they can be doing something completely different on their own unique activities. So here is a clearer example, just to kind of make it a little more clear. So the holding company example. So imagine that big box, all right, is a toy holding company. That's the name of the big box. Toy Box Holdings. Toy Box Holding doesn't make any toys of itself. It's just the company that's the holding company. It doesn't make any toys. It owns several smaller boxes. One box makes teddy bears. Another box make pizza, and another one runs a toy store. So it's all different companies underneath Toy Box Holdings. Each of these smaller box operates on its own, but Toy Box Holding owns all of them and benefits from the success of them all. So all the money those little ones make, Toy Box Holding, like, run me all my coins, bring all of that up here to me, and I don't have to do any work. That's how that works. Now let's do the parent company example. Think of the big company called Yummy Foods, and I like to eat, so we're gonna talk about food. Yummy Food makes its own snacks and it's famous for those snacks. But Yummy Food also has a child, the company called Crunchy Snacks. That's the child. Crunchy Snacks makes chips and is owned by Yummy Foods, the parents, the mommy and the daddy. So Yummy Foods is the parent company, the mommy and the daddy, because it makes its own products and owns Crunchy Snacks, the babies, the children, which is like the child, okay? So the big difference in the holding company is like big box owning other small boxes without making anything itself, while the parent company is like a parent that makes its own things and also owns the child's company. Okay, so I hope that kind of explained things a little bit. I had to break it down a little bit so you guys can understand, because it can be a little bit confusing. So let's talk about some benefits of establishing a holding company or a parent company. So these structures can offer several advantages, including risk management. So isolating liabilities and separating the subsidiaries to protect the overall enterprise. So the overall enterprise, especially if we're talking about this holding company, it's not doing any operations. It's not doing anything. So let's just say, so profit first taxes, I have a holding company, it's called holding company. And I have profit first taxes. Then I have Airbnb business, it's called Airbnb Business LLC. I'm making it up. It's another one. So Airbnb LLC and profit first taxes underneath holding company. Holding company is in charge. It's the one on the top. It's in charge of both of these. Profit First Taxes is running its own operations. Airbnb LLC is running its own operations. The liabilities is separate. So if Profit First Taxes get sued, it doesn't affect Airbnb. If Airbnb LLC gets sued, it doesn't affect Profit First Taxes, and none of those affects the enterprise, which is the holding company. All right. Hope that makes sense. Financial efficiency. So streamlining operations and potential reducing taxes. So that's the second advantage, is the financial efficiency. So the operations in Profit First Taxes is going to be different from Airbnb LLC. And then, of course, it all flows up to my holding company, or if I'm talking about that parent company, it goes to the parent company, and the parent, mom and daddy's in charge, or the big holding company is in charge. All right. Number three, strategic growth. So facilitating expansion and allowing for more straightforward diversifying or spinoff of business units. So I know many of you may have an LLC and you started off doing one thing and you're like, you know what? I want to do something else. So if you create a DBA and you're doing a DBA with that something else, well, that DBA, you're doing business as this particular business, but it's still directly related to the original LLC. It's underneath all that umbrella. So they can just sue that umbrella and then that stuff rolls downhill. You know what I mean? So if that's a little bit different, having those DBAs can really affect the company that you started doing the DBAs underneath, that original LLC, versus if it was a holding company or a parent company, then things would be a little bit more harder for them to go mess with that, because it owns ownerships or it doesn't have the operation. So there's nothing up there to come try to sue. You're not suing the holding company. You did the business with Profit First Taxes or Shane Airbnb LLC. You didn't touch the enterprise. So that's how how it can be different in the growth. And of course, the tax, it can reduce your potential taxes, because if all of the funds and all of the finances going up to the holding company is putting all of that income and all expenses together and writing all of those things off, it can potentially reduce your taxable income. Okay. So let's talk about a case study with a Tech Innovation Inc. So consider the Tech Innovation Inc. a successful parent company that spun off of its research division into a new subsidiary. All right. So this allowed them to attract investors, specifically investing in cutting edge research without exposing them to the risk and the liabilities of the broader tech manufacturing business. So this is a good case study in terms of how the spinoff happened. So you have the holding company, or the parent company, and then you have the tech company, and they want to be able to get funding and things like that. Now they can have multiple different companies here, but that money is flowing up to the holding company. So if the tech company go and it can attract those investors, because the investors is seeing all of the money that's going up to that parent company or the holding company, and it's going to look more favorable than if you have these businesses by themselves. So it's going to give you more capital power, so to speak. So when to consider a holding company. So establishing a holding company might be the right move if you're looking to expand your business ventures without increasing the risk to your existing assets. Have a clear separation of business activities, investment, or property holdings. So, like I said, if you want to, and that's why I said, come watch this if you are considering doing parent companies and holding companies, because you guys are not even doing bookkeeping correctly. So, if you're not doing bookkeeping, you're not keeping the accurate records, you should not be touching nobody parent company or holding company, because you're going to be in a whole lot of trouble. You're going to be in so much trouble. It's going to cost you a lot in the long run. Streamline the process for selling of parts of the business. So those are going to be some of the reasons why you will want to have a holding company. Expanding your business ventures, having a clear separate business activities from investment and holding properties, streamlining the process for selling of parts of the business. It makes things so much easier. So now we're going to talk about the legal tax considerations, because this is the part that you guys don't want to talk about, and I'm here to educate you on it. The decision to form a holding company structure should be made with careful consideration of legal tax implications. These structures can offer tax benefits, yay, such as tax consideration on more efficient tax handling of intercompany transactions. But they can also come with regulatory compliance requirements. Now, you're going to have requirements for each one of your businesses. So, although you have this holding company that has in control or owns all of these other smaller subsidies, these other companies, you still have to do record keeping and bookkeeping and keeping up the compliance things for each one of those subsidies, each one of those business. You still have to do all the compliance things with that, even though all of the assets and the income may flow up to the holding company, and overall the holding company have to now keep records of all of those records. So if the records for those those smaller companies is prestige, it's going to be easy. Just give it to the holding company. Holding company keeping it for safekeeping, so to speak. So the children have to do their job so the mom and daddy can take care of them, kind of thing. Similar. That's like the analogy I can use. So you still have to manage each one of those businesses in the correct way by doing all of your record keeping and your bookkeeping and keeping your business and personal expenses separate for each one of those businesses. They each need to have their different bank accounts. And of course, then we have the holding company with its own bank account, with its own compliance regulations, overseeing all of those businesses. All right. So that's why I said, if you are just now getting out started and you're talking about, oh, I want to do a holding company, why? You don't even have the resources financially to maintain a holding company or even a parent company, because it's going to be costly. You still have to file and do the appropriate taxes or the bookkeeping for each one of those that can cost money. So each one you're paying money for to do the record keeping, and you're paying the financials and your taxes or whatever. And of course, then you have the holding company. So keep all of this in mind when you want to get on the social media bandwagon and be like, I want a holding company. Well, here is the dirty little secrets about those holding companies that you might not be aware of. You still have to take care of the children for the parents, okay? So operational impact. So the operationally, these structures can add a level of complexity to your business. managing their company transactions, consolidating financial statements, and ensuring regulatory compliance across the different jurisdictions can require significant resources. So many of you have holding companies in Delaware and Wyoming, and we all know why you guys are using those states. I'm not going to get into it why. You're using those states because of it can be tax advantageous for you to have them in those states. But even though you're operating your business in another state, you still have to worry about those compliance regulations within the state, different states. So when the transactions and the financial statements, when they got to flow over, you have to make sure those transactions and the financial statements are in tip-top shape for those companies so that they can go over to those holding companies. All right. So it's not like as simple as you think, oh, just create it, let everything go over there. I don't have to worry about it. You have to be more worrisome when you start talking about holding companies and parent companies than you would if you just had one business to worry about. Okay. So the strategic planning and professional advice. So strategic planning, can't speak today. Strategic planning is going to be important. So you want to work with a legal and financial advisor to analyze how these structures can align with your long-term business goals. Professional advice can help navigate the complexities and tailor the structure to benefit your particular situation. So you're not just creating holding companies or parent companies just to create them because you just want to save on taxes. It's other things that go into why you will want to do this. If the goal of your business is just to make a little bit of money, you're not trying to be a millionaire, you're not trying to have property, you're not trying to do anything, you don't need to have any holding companies or parent companies. If you start really talking about really legally having legal tax shelters and all these other things, assets and things that, these higher level strategies that you can really take advantage of by having these, then yes, come on over here, let's talk. But if you just trying to save a couple dollars, don't do this because you end up spending a whole lot more. You're going to end up spending more than you think you're going to be saving. Okay. So into conclusion, because we're not going to stay too long on this because this topic, it can be a little bit complex and I don't want to confuse you. So I can go into more details and breaking things down, but that's more so for a paid masterclass where we will really go into that if you guys want me to do so. But to really sit here and break down every detail, it's going to be a little bit complicated. It's going to be confusing to you and you're still not going to really get it. And it's going to be, it's not going to be as beneficial. So I just wanted to give you like the skinny, like the overall on to really get you to think. Those who really want to get into this, really think about what you're getting into by giving you the facts. Okay. So choosing between a holding company and a parent company structure is going to be a strategic decision that can significantly impact your business growth, risk management, and tax efficiency. With the right planning and advice, these structures can be the powerful tool in achieving your business objectives. So let's talk about teasers for the next week. And let me see what is the next one we're going to be talking about. We're going to be on the next session. We're actually going to be talking about overcoming challenges for entrepreneurs of color. I got to break it down for my people. So we're going to be talking about the challenges of entrepreneurs tend to face with people, people of color. That is going to be the next session that we're going to be talking about. So you don't want to miss that. Come on over here and so we can talk about some things. So in closing, thank you for joining us in exploring the strategic use of holding and parent companies. If you found these sessions informative, please like, subscribe, and share. Come on over here in the YouTube family. And if you are on any other of the platforms, of course, you can follow me. You can comment with any other topics that you want me to talk about. Drop your questions in the comment. Check the description for the links. And here it is. I have the link scrolling across the screen, bit.ly/SD negotiator. Well, it's not scrolling. It's sitting stationary. And if you need any assistance with talking more about the holding company versus parent company, if this is for you, you can actually schedule a consultation and I can help you. We can chat about that. So thanks again for joining in on the Holding and Pairing Companies. And if you found these sessions informative, as I said, like, share, subscribe. Your strategic journey in business structure starts here, right now, today. And until I come back with the next topic, I hope you guys enjoy the rest of your